Consolidated Infrastructure Group is an infrastructure-focused company whose main subsidiary, Conco, builds high and medium voltage power systems.
Right, so that's like the renewable stations, also helping local authorities to expand their infrastructure. And it also has an oil services business in Angola, where they look after and repair those rigs that go out into the Angolan oil fields.
Market cap here, 4 billion rand, PE ratio of 10.4, and currently no dividend. I like to sometimes start the discussion with having a look at the share price graph, because it just sets the appropriate context. And this is, as you were saying earlier, Paul, perhaps a different story in the industrial space.
Yeah, so they would, I don't know, Conco probably did do, underground substations before, and then they saw that refit program coming and, positioned themselves there. We know that there's a lot of upgrading required in the electrical network.
There is, but it's project-based. So when we spoke about Invicta, Roynet, or one of the other companies, Udaica, we're going to talk about in a minute, those are companies that sell because of maintenance. Their products go and get sold because something breaks. In the case of Conco,
and there's the replacement cycle,
exactly,
which works
which always happens
to that investment
which gives you some annuity income. In the case of Conco, in Consolidated Infrastructure's life, it's project-based. Every start of the year, you start with an order book of 0. And you need to work very hard to get your next projects. So when there are a lot of projects, great. And that's where you see the share price going up a few years. Then when the projects dry up, you've got a problem. So I prefer companies that have got strong annuity income versus companies that are more project-based and order-based.
Because there's just too much stress on managing that pipeline.
Correct, and your cash cycle is difficult. You'll see it's the guarding of the banks. The banks always like to fund these.
How come the share price is holding up better than the others, relatively speaking? Or am I misreading the graph?
No, you're reading it correctly. They are diversifying away from purely Conco. They got AES in Angola, they've gone into building supplies, even rail now. So they're trying to diversify away, but the majority of the profit is still from Conco.
Look, it was also a company which came to the market through a reverse takeover of a thing called Buildworks, which had been a really somewhat dismal failure as a listing of a building supply company in the previous cycle. Conco was a very good, very rapidly growing business managed by a guy called Raul Gamsu, and the Gamsu family dominate the shareholder structure still. He's very good. He's young and he's obviously very driven.
If the family dominates the shareholding structure, what about the free float?
I'm not sure whether the free float is adequate or not. Normally, as these companies get bigger, they attract more investors. So I don't think their family holding is like 90%.
Do they have a liquidity problem?
No, there's sufficient liquidity.
Yeah. And so I think they've been good acquirers too. They buy things that do well. So I think that's why it's done well, is because people were struck by, wow, here's a company in this space which is growing very fast year on year. And they continue to do well.
We're running out of time, so let's call it hot or not.
Well, I like the management team, and I also like the electrical infrastructure building cycle, notwithstanding our issues. I know that the big renewable thing is going to be ongoing, so I'm going to go hot.
Hot? Not?
It's a tricky one. You've got this project-based business. It's got cash flow issues. If they diversify and they're successful in that, great. If not, they might have a problem when things really slow down. So I'm on the fence, but I would then do the opposite as Paul. That is my nature.
I can see this is going to be a very interesting board at the end of our show.
Excellent.
You guys are going to be completely on the opposite spectrum.
We're hedging each other.